In the energy quadrant today, taking a look at the March natural gas contract. Huge swings today, high volatility in natural gas, which really isn't unusual. If you want to see some of the characteristics of natural gas's volatility, you can go to the CME Group's website, check out their CVOL indexes, which is now expanded to include metals and energy, including obviously the Henry Hub natural gas contract. We had March natural gas swing from a large gain, 4.6% on the highs, 3.05 was that price, all the way to a decent loss at that, down 2.47% at 2.839 on the lows, finishing the day way closer to those lows, down about 2.3%, so almost at the lows themselves. Now, demand is high, strong national demand coming from frigid air anchored across the northern and central U.S. into next week, highs of only zeros to the 30s and lows of negative 20 degrees to positive 20 degrees Fahrenheit. Areas of light rain and snow are going to continue along a clear dividing line between that frigid air over the north central U.S. and much warmer conditions from the south to the mid-Atlantic coast, where highs are in the 60s to the 80s. Frigid air also dominates the plains and North Texas with lows of zeros to the 30s. And this is going to slowly spread eastward into the weekend and early next week. So we expect demand to go from high to very high in the natural gas futures. Now, EIA inventories came out today, and today's storage report printed a draw of 171 billion cubic feet, smaller than market expectations given all that cold air across the country. This decreased surpluses to only 152 billion cubic feet above that 5-year average. Now, next week, as we mentioned, should bring a much larger draw due to that frigid cold air that's going to remain over the Midwest and head eastward.